In this video, I've added 4 stocks to my portfolio, and I want to bring your attention to those 4 stocks so that you can have the opportunity to maybe add them to your portfolio as well. So the first one I'm looking at is BJR's restaurant. Now, of course, this is, just quickly, BJ's Restaurant is a leading American casual dining restaurant chain known for its signature deep pizza. Now, I have created this little newsletter that I've attached to this email and to this video, and so if you want a little bit more information about each one of these stocks, you can see I've given a little bit of a description. I've captured the chart for you. I've attached this little chart in here from the fundamental stats from FinViz, and then I've done that for each one of the stocks that's in our list. So you can go and take a look at that, see a little bit more information. But the stock that we are looking at right now, this one is BJ's Restaurant. So BJ's Restaurant, this is a stock that's been going through a nice little Elliott wave pattern. So if we count this wave pattern down here, X, this is 1, 2, 3, 4, 5, A, and it went all the way up B and then down to here. This is kind of C right here. So this is what I'm looking at right now in BJ's, and they are, again, a pizza restaurant. They're doing quite well. This is the accumulation stage on this stock. Now, I realize that there's the possibility that this market could fall out the bottom, and if it does, we might have another accumulation stage down here that we'd have to go through. But right now, I'm accumulating shares, looking for this market to break to the upside off this ABCD pattern. This could be a Wyckoff spring down here. It's a nice little double bottom down in here, as you can see, as it come down and tested that previous low. It broke it just to prove that it could and started to rally once again. But I do realize that there's a possibility this thing could fall and go through another accumulation down here before we get that next rally. So I'm not heavily going into this market, but I am accumulating over time, watching, seeing what it's going to do, looking for and anticipating a rally out the top of this narrow sideways channel. So that's BJ's, and let's come down to Chegg. Now, just to pull up Chegg a little bit, again, to refer back to our newsletter, you can see that Chegg is a prominent American ed tech company dedicated to providing educational services and resources to students worldwide. Founded in 2005, Chegg offers a comprehensive suite of digital solutions, including textbook rentals, online tutorials, study tools, and scholarship services, etc., etc. So you can see that this is coming through, and again, I've got the statistics down here. You can see their sales have been increasing a little bit, and since their stock's been going down, I think we're going to see a better earnings per share this time around. So this is, once again, Chegg coming down off this nice little 3-drive pattern here. So it comes in here, X, 1, 2. This was one big long drive here. That was 3, 4, and then all the way to the bottom right in here, 5. And now we're going through the little ABC pattern, and I'm anticipating a rise in price. But we've got this, as you can see, this nice long Wyckoff accumulation period right through here. That's what I'm going to call it. We haven't got a spring yet, so there is the possibility that we could get a little spring in here. And of course, a spring would be where it'd come down and break the lows before it took off and ran once again. So be mindful of that, but I am accumulating shares on this one. You can see it's only $17. All of these stocks that I've got in here listed are very low price. In fact, if you come back to BJ's, you can see it was $28. Chegg is $17. And so that's kind of what we're looking for, just accumulating shares over a period of time with this Wyckoff accumulation strategy, anticipating a rise in price eventually, and that's what we're looking for. Okay, so that's Chegg. Let's come into Fiverr now. Fiverr, I really like Fiverr as a company. I use it all the time. I have people help me with things like covers of my books and stuff like that, graphic arts work, some video editing work, that type of thing, and they have a lot of that type of stuff going on over at Fiverr. So I like Fiverr as a company. I use it myself personally. Fiverr International is an Israeli-based online marketplace that connects freelancers with clients seeking their skills and services. Launched in 2010, Fiverr has grown to become one of the world's largest platforms for freelance work, spanning a wide range of categories such as graphic design, writing, programming, and digital marketing. The platform user-friendly interface allows freelancers to offer their services or gigs as various price points, while clients can easily search and find the right talent for their projects. Now, they started off, the reason they call them Fiverr is because you could hire somebody for $5 and they would offer a service or something that they could do for $5. And of course, they still have very low entry prices. Some people still using that $5 entry, come and hire me for $5 and I will do XYZ for you. And then of course, they've all built up on that, and you can charge they can charge more, you can pay them more to do more professional level stuff. But that's where Fiverr came from. And so it's a great little company. Again, I use it myself. And so they've come down off this nice little ABC pattern off the top here. And what we're looking for in this market is we're looking for them to come down and continue this break or this rally up out of the top of this narrow sideways channel, which is the Wyckoff accumulation. So as we come down through here, you can see that the Fibonacci projection has dropped down into the 130.9, which is our Fibonacci golden ratio to the downside, or Fibonacci projection in this case. Now again, be mindful that there is the possibility this thing could come down here, give us a spring, break lows before it starts to rally once again. Since we haven't really got much of a spring, you could call this a spring, but not really. Springs are supposed to happen towards the end before it takes off and rallies. It doesn't mean you're going to get a spring. We don't always get springs out of these things, but we also have to be mindful that there might be an additional downside on this as well, and we could get another accumulation down here as it drops down out of the bottom of this thing and goes into an accumulation that we would then look for a rally out of that one. But so right now I am accumulating right now in anticipation of a rally out the top of this thing, but mindful of the fact that we may have to accumulate some more down here, so not getting crazy. So as we come into the next one that I want to talk about is Smile Direct. Now Smile Direct, well, let's go back to Fiverr. Fiverr, you can see, is $35. So all of these are below, they're all below $50. So BJ's was 28, Chegg was 17, Fiverr is 35, and then SDC, this is kind of our Hail Mary down here. This is a 46 cents. So this is a penny stock down in here that you can play with a little bit. It's been up above $1 before, so there you can see back here on the left-hand side, it's been up as high as $1, and it's currently trading at 46 cents. So it's come down off this big long downtrend. So we could kind of say, well, it's an A, B, C, D. But we're going through an accumulation area as the market's going sideways. It broke out the top. Again, this is basically that same pattern where we could anticipate a continuation of a rise. We're going to accumulate here, but we do realize that there is a possibility that this thing could come down, create a spring, break out the bottom before it then takes off and starts to rally once again. So there is that possibility. And then, of course, just like the others, there is the possibility that we could get another accumulation down lower, as this market could come down, break this previous low, come down and start going sideways, and then break out this one. So again, not getting real crazy with this one, but it's a real inexpensive stock, 46 cents with a lot of upside potential. You know, if it went back up to $1, it'd be more than double your money in however much time that would take. But you can see from 89 cents down to the low down here at 37 cents, that was about a 3-month period of time. So that's one I'm adding to my portfolio just for fun. It's very low cost. I have had some people say that to do this accumulation process, they don't want to be spending $200-300 every time they buy a single share to accumulate over a period of time, because that gets very expensive for some of the smaller portfolios. So here's some smaller portfolio opportunities for you, along with the newsletter to kind of give you a little bit more information about what's going on in this market. And there's your Smile Direct description. As you can see, they are in the dental industry, and then they do this teledentistry stuff where you send in your information and they send you back fitted braces. So that's what they do, and we're adding a little bit of that to our portfolio as well. So I hope this has been helpful for you, and if you join me, let me know. I'd like to know if you put any of these on for yourself. All right, take care. We'll catch you next time.